Welcome back. Today we're going to be talking about what is a line of credit. Now, a line of credit is a lending instrument that you can get from a bank or a credit union, just like a loan. A line of credit usually has an interest rate higher than a loan. So that's what deters people to go on and get a loan, is because a loan usually has a lower rate of interest. So you qualify based upon your credit, just like with a loan, and the bank will give you a maximum amount of line or money that you can borrow at any given time. Unlike with a loan, they give you the money up front and you pay interest on it whether or not you use it. But a line is available for your use as you need to use it. You can pull the money out, you can pay the money back, you can turn around and use it again. That's why it's called a revolving account. So if you get a $20,000 line of credit and you pull $20,000 out today, but you make a payment of $2,000 back tomorrow, that $2,000 is available for you to use again. So it's a revolving account. Money in, money out, money back in. Lines of credit come in different forms. So you may have a credit card that we all are used to knowing about and using. Most of us have one in our purse or wallets. We refer to the personal lines of credit as PLOCs and the home equity lines of credit as HELOCs. The credit card and the PLOC, the personal line of credit, are unsecured, meaning there's no collateral needed. But a HELOC, your home equity line of credit, is secured only by your home's equity. In the example of the $20,000 that you may be approved for, you only pay interest on what you actually use. So if you have a $20,000 line of credit and you use $4,000 of that, you're only charged interest on that $4,000 that you're currently using. Unlike with a loan, when you take a loan out, that whole amount is charged interest. That's why you pay on it, whether you use the money or not. It can sit in your savings account, but you still have to pay the interest on that, and you have to make monthly payments. Loans are set up on an amortized schedule where you make the same payment every month. It's not the same for the line of credit. All you pay on the line of credit is what you are actually using at that time. The interest is also charged differently for a credit card than it is a line of credit. On a credit card, there's no interest charged until that due date. You have until the due date to pay the balance in full, and if you do, there's no interest charged. A PLOC, or a personal line of credit, is charged from the first day that you use the money. So if you pull $500 today, the interest charge will start on this day, and it will be based on an average daily balance. A home equity line of credit is the equity in your home. So the limit can be as low as $5,000 all the way up to the value of your home, $500,000 or more, depending upon the value of your home. Remember, with Velocity Banking, it is very important that you don't play with your lines of credit. Lines of credit are for debt removal or acquisition of property. It's not to buy TVs and clothes. I mean, you can, but you're going to pay for it. So just remember that. I hope that this helps you to understand a little bit more about what a line of credit is, how you should use it, and how the interest is charged. Thank you for joining me today. I'll see you in the next video.